I've just put the session on record.
Okay.
Okay. Now let's see the things from the beginning. So, first and foremost thing that day we discussed that we are doing the financial reporting. We are preparing the financial report. See, we are preparing the financial reports for whom? Who are the users of financial information? They are stakeholders. Am I right?
Yeah.
So, stakeholders can be divided into two parts. That is internal and external. Isn't it so? So
Yes.
internal, who are the internal stakeholders? Those are board of directors, the management of the company, and the employees. Who are the external stakeholders? Those are shareholders, nothing but the investors. Investors again can be categorized, but that's the reason why I'm writing everything individually. Shareholders, then you have bond holders, then you have banks from whom you have borrowed the money. Okay, bondholders are nothing but general public from whom you have borrowed. Banks are the financial institutions from whom you have borrowed. Then comes the government to whom you are supposed to pay taxes, and they also always want you to be a profitable company. They look forward for taxes. Correct? It is the revenue what they get from you.
Mm-hmm.
Then customers, a good see customers always prefer good companies. That means the companies which are profitable and which has a good track record, isn't it so? And they come to know the that whether the company is profitable or not. See, you expect innovation and better response, better service from a good profitable company, because profitable companies spend a lot on all these aspects. Correct? See, why you buy LG products, LG electronics products? Because you see, when you compare LG products from other products, LG is the most innovative company in the world. That means they spend $2 to $3 billion only solely on innovation, like bringing new things and like developing new technologies and giving a better experience to the customers. So that much they are spending, in the sense new area is getting created. Correct? That is only expected if the LG Electronics is profitable from that investment. Correct? So even though less margin, but they give unique things. So then comes the political parties, the pressure NGOs and the pressure group, because see, you earn profits, we are not against that, but not at the expense of spoiling or polluting the environment. Or see, Tata company, Reliance company, or any XYZ multinational company, how much stakeholders they are of this country or of this environment, that much stakeholder we are. When it comes to enjoying the benefits of natural resources, everyone is equal. I know company is an artificial person created by law, but every company has n number of people behind it, so they cannot spoil the environment for their own profits and like make us to suffer. So NGOs look forward into this. So but every company here, every stakeholder here, what I've mentioned, either here or here, only look for company's performance at the end of the year. They come to the performance from the statements. Correct?
Hmm.
Statements are the only source through which they come to know about company's performance, whether company is profitable, whether company is into losses, etc. So here, users of financial information is clear, and why people want to know about company's performance, or why people look forward to the financial statements. Very clear. They want to take decisions. So to make investment decisions, they should know about company's performance, whether they want to continue with the company, or they want to sell the stocks or bonds of that company and jump into some other investment. This was related to investors. If it is like extending or withholding credit, it is related to banks or people. Here I mean bond holders. Who are the bond holders? Who have bought the bonds of the company, in the sense they have lent their money to company. Correct? Or company has borrowed from them by giving them the security. Now if the company is in losses, and how will these bondholders know whether company is in losses or not? Or how these bondholders will know will companies liabilities are increasing? See, company has already borrowed money from these guys, correct? Again, if the company goes for like additional loans, these guys come to know that company is making additional borrowings. So these bondholders, they have like they put lot of restrictions on company when it comes to borrowing additional capital or borrowing additional money from the market or from any financial institution or by issuing bonds to people. They don't want companies to do that until and unless their money is repaid back. Okay, so how will they know that companies liabilities are increasing beyond a danger level, or whether company is maintaining good balance between debt and equity, or has a proper balanced capital structure? By seeing the company statement, that is especially balance sheet. So they can also know about the company's position, and we can know about the company's strength and weakness. We can evaluate management's performance, whether management's decisions are uh, kind of proving to be fruitful or proving to be good for the company or not. They have taken some decision to invest, and that investment is giving good returns, so that's a good decision. It like an example. And compliances with the requirements are also very important, the regulatory requirements. So that also can be known from the disclosure. See, when a statement is prepared, it is prepared in this way: first SOPL and OCI, other comprehensive income, that is in like this is as per IFRS. As per US GAAP, you can say P&L, P&L account, other comprehensive income, then you make statement of changes in equity, and then you make the balance sheet. Okay, so this is what the statement is all about. After that comes the disclosures column. Disclosures, nothing but footnotes. So footnotes are the footnotes is the area after preparing all this. Then statement of cash flow also you prepare. So after preparing all the statements, you have footnotes. In that footnotes, you give all the disclosures regarding what you have done. So that gives additional information about companies compliances, whether company is following with the rules and regulations or not. Correct? Direct and indirect users, I have explained you. Direct users are the one who are directly connected with the company. These are the ones. And here also, like even though they are connected, but they are not directly working in the company, like shareholders and bondholders. They just enjoy the benefits at the end of the year. Correct? So I have given the distinction between internal and external also. I have yesterday explained you about all this, what we prepare under financial statements. Differences between IFRS and US GAAP. See, international financial reporting standards is followed widely around the world. Okay, almost all the Commonwealth nations, the entire European Union, the Australia, the Singapore, the South Africa, there are many countries in the world, they follow IFRS, Canada and all. The ones which were, like as I said, Commonwealth nations, the ones which were ruled by UK, all follow IFRS. Now you'll be having a question, sir, why they follow IFRS, International Financial Reporting Standards? There are many nationalistic governments these days. India, as like India is notorious right now in the world, because we have a thorough nationalistic government, which says country first, and they want everything to be made in India. They don't want any. See, it's not like they don't want to give priority or to other countries. We are also having export, import, and trade agreements with various nations, but the priority is first given to the local made things and local industry. Okay, that's the reason why we are more nationalistic these days. We are termed as, so the government is nationalistic government. So we have our own accounting standards, but still, why should we follow IFRS, and why India has converged with IFRS? See, we are not, our standards are not that developed. There are many new things which IFRS has. There are many treatments which our standards lack. IFRS has. And what are our standards? We have just done cut, copy, paste. That's it. The base was given by the International Accounting Standards. So previously till 2003 there was IAS, International Accounting Standards. After 2003 IFRS has come into picture. Now widely around the world IFRS is followed. So you can say this was the base and this is the modern one. Okay, but you have to study this. If you have to study this, you should also study this. You should not ignore this, because this gives us the history, this gives us the present and future. Correct? Now see, now like as I have discussed about IFRS. So IFRS, there are two bodies here: international Accounting Standards Board, IASB, and FASB, Financial Accounting Standards Board. IASB has given the IAS, International Accounting Standards and International Financial Reporting Standards. FASB has given US GAAP. Okay, so these are the two standard making bodies, and these are the standards what they have given. Both the bodies have one intention, that whoever are the user of their standards should get the best output from their standards, in the sense best results from their standards. They want the users to be like if the users are using their standards, things would be on track, never things would be wrong, and everything would be on track, or everything, there will be less chance of any error. Why? Because these standards are made with thorough research, okay, and are made user friendly. The primary aim is to give the best results or output to the end user. But why they two differ? Like, see, 95% both the standards have similarities. I am saying they are similar to 95%. 5% they differ because their system is a different system. If I say IFRS and US GAAP, this is a principle based system. And this is a rule based system. See, rule based system is what, if they make rules, you have to follow that. Finished. Blindly. You need not question them. Principles are nothing but, if something is justified, you have to if something is justified and you have a very good reason, or you have let's say if you can justify that this particular thing what I'm doing is right or correct, then it can be followed. For example, if I make a statement of financial position, current assets and fixed assets, so I'm showing current assets here and fixed assets I'm showing next to that. I'm giving priority to liquidity. Okay, so I can show it here, isn't it so? uh, if I don't want to give priority to liquidity, I can show this here and I can show this here. Liquidity, that means I want the investors to see that how liquid I am. I want to give more emphasis to liquidity. That's the reason why I'm putting current assets up and fixed assets down. As per US GAAP, they say the format is like you should always show current assets in the first and fixed assets after that. If they make this kind of rule, that means you should follow this rule and you cannot question anything. But IFRS says I have no rules. I am principle based system. That means you show it here, you show it here. It doesn't matter. At the end of the day, the balance sheet should tally. That's it. Okay. But US GAAP says no. What rules we have framed, those are final. You should follow those rules. One more example I can give you. See, there is a waste basket. There is a basket in which you deal. That means you sell basket to customers. Now this basket costed you $100. Now it has become a waste basket. Now you understand what I say. I'm saying it has become scrap. And when you want to sell in the market, people are ready to pay you $30. Okay. So now, you are incurring a loss of $70, isn't it so?
Yes. Yeah.
Yeah, so you have to show this loss in the statement of profit or loss, or you can transfer this to COGS. Anything is all right. Both the treatments work. Okay. See, as per the US GAAP, what they say is, if something goes like this is what it is happening. But if there can be a chance that out of 100 customers whom you have approached, everyone is ready to pay this amount. But at last you got some customer who is a collector of these baskets. Okay, he collects all the baskets since many years. He is doing that. He is a collector, so he is ready to pay you $200 for this. He's ready to pay you $200 for this. Now what do you say? Now is it going to give you economic benefits? Can I say it is your asset?
Yeah.
Because someone has approached you, and after 10 days he is going to crack a deal with you by giving you $200. So today itself, can you think that it is an asset? You can presume that it is an asset? Please tell me.
Yes.
Yeah. So IFRS says anything is possible. Okay. You can show this as an asset, or you can show this as a loss, whatever it is at that point of time. Okay, it is justified.
Mhm.
But you know, US GAAP is like of the opinion it would not go up. They won't, first of all, accept this. What they say is below $100, whatever it is, we will term it as an expense. Okay, and like above $200, like there are various other scenarios whereby they won't consider upward revaluation at all. It is not there. If you are recovering, then they will not say this as some asset. They'll treat it as like some profit, some income. Okay,
Mm.
so there are certain differences in both the system. One is like making rules and asking the people to follow it blindly. One is saying that no, wherever, whatever treatment you are giving, if it is justified, if it is like something which you can give reason to, then we will allow you to do that. So that is the difference between the principle based and rule based system. Correct? So now let's go for the another thing. Now, balance sheet. So as we have already discussed about balance sheet is like also called as SOFP. We know that it is prepared at the end of the year, and balance sheet helps you to understand about company's liquidity position. That means how much cash or like cash equivalents they have, or short-term investments which can be immediately converted into cash they have. Financial flexibility. That means by seeing the liquidity and solvency position, how solvent the company is, we can understand how flexible the company is. Okay, flexibility in the sense whether it has good amount of money to buy some assets, or to run its daily routine basis requirements smoothly or not. See how you will be, see how you can be flexible if you go to a shop and like there is something like you want to buy some item and you have carried 1,000 rupees. So are like you have this limit. This is the final limit. Correct? Correct. So
Yeah.
now you are not flexible. You are rigid. That whatever it is there, I can buy only by paying this price. I don't have even a single penny more than that. If you carry 5,000 rupees, you are flexible. That means you are flexible between 1,000 and 2,000. Anything, whatever you get that item for any of the price, you are ready. Correct. It only depends
Yeah.
by upon your liquidity position, like how much you hold. Based upon that, we can like come to draw a conclusion regarding the flexibility and the risk, how much risk the company is taking by seeing its investments, where they are investing their money, in what kind of investment options. We can understand the risk also. So all this is only possible if you see, or if you thoroughly analyze or study the balance sheet of the company. Correct? Now,
Yes.
then elements of balance sheet, we have already discussed about assets and liabilities yesterday, how like the definition of those two aspects we have discussed. Then comes the current assets. Current assets, I have yesterday told you, and also I have repeated while I was taking ratio analysis session, that something which gives you economic benefits within a year is nothing but a current asset. And these are the examples of current asset: cash in hand, cash equivalents, marketable securities, receivables. Okay, receivables are what, like you sell goods on credit basis to your customers and they are supposed to make the payments to you. Merchandise receivables. There are general receivables also. Okay, then some contract assets classified as current assets. That means you have made a contract with some guy, and based upon that you are going to deliver some goods to him within 3 months, let's say. So it's within a year, and on that you expect some
Mm.
money from them. So it is nothing but it's going to give you economic benefits in the future, no, when you sell it. So it's nothing but it can be classified as a current asset. Short term notes receivable. So what is this? Notes receivable. See, like you have invested in a company. Okay, that company has borrowed money from you for 3 months, or for, let's say, for 6 months, and they have given you some notes. Notes are nothing but promissory notes. What is that?
Promissory note.
Promise. Yeah.
Yeah, see, if I want to borrow money from you, you'll ask me some security, na? So what will I do? I'll just sign a document, and that document is an authenticated document. That means it is some document. If two parties sign, it binds both the parties. It is the document which is a legal document. That's a promissory note. So companies give you notes, and take money from them. So are you supposed to receive the money from the company in 6 months with some benefits? Yes. So it's a current asset. Inventory is a current asset. Prepaid expense is a current asset. Already we have discussed about these two in details. Okay. The non-current assets are something which give you economic benefits beyond a year, like property, plant and equipment, then leased assets. That is, I'll not tell I'll not tell that leased assets are something uh, which is an asset for you, but you have right of use assets, okay, under the lease agreement. And some intangible assets which doesn't have any physical substance, okay, like patents, trademarks, copyrights. Those are the assets which are documented in the documented form. Okay, you know, like some movies are made, like some 20-30 years back, many movies were made, and many songs were made. You are seeing that those songs and those songs are remixed these days and are like presented these days. There people don't want to spend on writers to write some good songs. Okay, so what they're doing is they're like, writers are charging a big amount, so these guys are buying those rights, recreating it and selling it, and generating economic benefits. So can I say copyright is an asset? Yes. It's a, what kind of asset? Intangible asset. Why? Because it doesn't have any tangibility, no physical substance. It is just documented. It's in a floppy disk or a CD, or these days you don't have these two, even pen drive or hard disk, etc. So deferred taxes, of course, this is something which I will discuss with you when I'll teach you the chapter for income taxes. Right now, you'll not get it. Okay, it's a lengthy explanation what I have to make to you, and some insurance policies. If you have taken for your employees, some cash surrender you have got. So all these also come under the category of assets. Okay, non-current assets, because it is beyond a year. Anything which is giving you economic benefits beyond 1 year are all your non-current assets. Then comes the fixed assets, as you see here, that is property, plant and equipment, land, building, machinery, furniture, vehicle, leasehold improvements, and assets obtained of lease agreement. As I said, you right of use asset under lease agreement, and mines, minerals, etc. All these are property, plant and equipment, even timberland also. Intangible assets just now discussed, okay, like goodwill, trademark, copyrights, franchises, all these are intangible assets. Now comes the current liabilities. Some obligations which you need to settle within a year is the current liability, okay, like cash dividends payable, accounts payable, notes payable, and some lease rental which you are payable, some current portion of long term debt which is payable, short term loans if you have taken, etc., tax payable, wages payable, all these are warranty payable, all these are current liabilities. Okay, and anything which is beyond a year doesn't come under current liability. Bank OD also comes under current liability. Non current liabilities are bonds, long-term loans, or any contract liability which is of non-current nature. After, like suppose you made a contract with some customer that you'll be delivering a flat to him, but you cannot deliver him in a year. It will take 2 or 3 or 4 or 5 years. These days builders are taking 5 to 6 or 7 years also to construct an apartment and give. So what do you think? What does it mean? It comes under what? Long-term liability or short-term liability? Please confirm.
Long
Long-term
term.
liabilities.
Yes, long-term liabilities. See, deferred tax asset and deferred tax liability are something to be discussed separately in some separate time when we start that chapter. So I'm not discussing about them. Any pension obligations, like, see, you work in an organization, and you may be, there are many companies who are giving pension uh, like benefits also. That means what the company does, they will just deduct some amount from your account, salary, okay, what they are giving you, and some contribution they will do, and they will deposit this money in pension scheme. What that pension fund company would do is, mutual funds and all, this money is again like used for investment purposes, and every year you are depositing money into that. So after 30 years what happens, like the all the investments, they mature, they take it in such a way that in 30 years those things will mature with good amount of benefits. So you get some 30 lakhs, 20 lakhs or 50 lakhs or whatever. depending upon the contribution which has been made from your salary. Because if you are a salaried employee with a very good package or salary, then you'll be lot more amount would be accumulated in the account, and more compounding, correct? So
Yeah.
here what I mean is, at the end when the maturity comes, there is like 50 lakhs which is got accumulated in your pension account with benefits inclusive in that. Okay, so they'll ask you like this 30, let's say 50 lakhs, how shall we give you the total amount, or shall we divide this in like 30 years or 40 years? Suppose let's say if I want to take this for 30 years, 50 lakhs divided by 30, so per annum how much I shall get? 1.8 something, correct? 18 threes are 48, 1.85 or 1.89 something I shall get, correct or wrong?
Correct.
Yeah, 30 into 1.8 is 4.8 something. A 1.85 you take 50 lakhs something it will be. So this amount is yearly amount divided by 12. What do you think? If I divide 2 lakhs by 12, how much I shall get per month? If I divide 1.8 lakhs by 12, 15,000, correct?
Yeah.
So 15,000 is every month you are going to get as pension.
Pension.
Yeah, just a small example. There are different schemes and different payment modes of different insurance companies. Since it's not our topic to discuss, so I'll restrict myself here. But I wanted to give you a rough idea. So 15,000 per month you can expect as a pension. So that is good or not? It's very good. See, someone who is of old age, he should ask for medicines. He should ask for other things to the caretakers or son or daughter, whatever. See, in today's scenario, it's very essential if we keep something safe side for the olden days and old age. Don't trust kids these days, okay? Don't know what they're going to do. It's a harsh truth. So pension also is important, and this I will discuss when I'll be taking the taxation class. And some warranty, like some extended warranties, assurance type warranties. I will tell you what this assurance type warranty and there are warranties and kinds of warranties. What is the difference between guarantee and warranty?
Guarantee means
Guarantee
lifetime.
we have for a year certificate.
The warranty is nothing but if something happens, we are going to do some servicing for that. Okay.
Services.
Yeah. So for that, don't worry, they collect money from you already. So all they say in a warranty, we are giving free warranty, and nothing is free. Everything is there's no free lunch or free
Covered.
coffee or tea, something which is existing in the world. Free delivery and all is included in the cost itself. What you are paying to the company. Okay. Just they say this like free delivery and all this, but nothing is there. Then comes equity. So as you know, with a small example, you bought a 10 lakh rupees worth of car. You made a down payment of 2 lakhs. You borrowed 8 lakhs from the bank. What is your debt here? 8 lakhs, correct? What is your equity here? 2 lakhs, correct? So you own the car only to the extent of 2 lakhs, not completely of 10 lakhs. It is not like that, because your equity is 2 lakhs. So can I say the total asset value minus liability is equity? That is 10 lakhs minus 2 lakhs minus 8 lakhs is equal to 2 lakhs, correct? Yes. But equity here, what we have seen is a small thing. In sole trading business, equity is nothing but the capital put by the owner. But you are dealing with the company form of organization. Do you think equity is just a one word for the company form of organization? No. Company form of organization comprises equity as all these are inclusions in equity in the company form of organization. So we will start with capital stock, that is the share capital. Then if something you are issuing extra shares for additional paid up capital, then comes the retained earnings. That is, yesterday I have explained you have the profit as $100, $20 is you're giving us dividends, $80 your company has retained. Why it has retained? To reinvest. So where they'll transfer this amount in the retained earnings
Retained
account.
earnings.
Then accumulated other comprehensive income. I will come to this OCI section in the next class, because this particular OCI requires a full-fledged discussion. Then comes the non-controlling interest. See, for the timing, I can explain you what is this OCI roughly. So you make statement of profit or loss, and after getting the net profit, the next section which comes is other comprehensive income section. What is this other comprehensive income section? Small example. Suppose you have a plant which is of $100,000. This you are holding, and you will hold for 10 years. Let's say every year it is getting depreciated. Of course, after 3 years, the straight line depreciation at the rate of 10% is like 10,000 per annum. So into 3, after 3 years your asset value is 70. This is called the book value. What is this called? Book value. But now when you inquired in the market, people are ready to pay you 1.5 lakhs for this. How much?
1.5 lakh.
Okay. So but you don't want to sell it. You just have known the value of this. You don't want to sell it. If you sell this 70,000 worth of asset for 1.5 lakhs, how much profits you're getting?
3.4.
Sorry, 80,000, correct? 80,000, no? No, madam. This is 70,000. This is 1.5 lakhs. 1,50,000.
Yes,
So
sir.
80,000 you're going to get, correct?
80,000.
Yes.
Yeah.
So when you make SOPL, statement of profit or loss, you show profit on sale of asset. And this is what kind of income? Non-operating income. Did we discuss in the previous session?
Yeah.
We discussed.
Yes.
So profit on sale of asset you'll show 80K. Now the question comes is, if you are selling this, you are realizing your profits. It's called a realized income.
Right.
But if you are not selling this and still there is an increment in the value, you are answerable to shareholders. Correct? Because shareholders will always ask, you are doing some investment. This is such an this is nothing but the plant and machinery they have bought for production purpose. But what they have done is they have just inquired in the market and they are ready to they are getting a higher amount of this. So every benefit has to be accounted, correct? Whether it is a realizable nature income or a non-realizable nature income. Am I right or wrong?
Yes.
Let's say company holds a stock and they have bought the stock for $100. They have bought 100 stocks. So their valuation is $10,000. They are not selling this. After 5 years, the valuation has gone to let's say $18,000. Still, they have not sold it, but the value is increasing or decreasing?
Increasing.
So now you will be showing your stocks at what value? 10,000 or 18,000? Of course, market value 18,000. Correct?
18,000.
Then
Yeah.
this is in the balance sheet. Then what about the increment in the value of 8,000? Where it has to be shown?
Income.
Income, of course. You will be having the prompt answer is, sir, it is in the profit or loss because it's a benefit, it's a
Right.
increase in the value,
Profit
it's an
or loss.
income. But I am saying this is some income which you have not realized. That means you did not get the cash in your hands.
Okay.
It's just a book increase because
Mm.
you're not selling this. So what happens? And the intention of yours with respect to this asset is nothing but to hold. You don't want to sell it. You want to hold it for 5 years and then you want to sell it. Suppose if you are some stock broking firm and your task is just to buy and sell the stocks to people. So you buy the stocks and you sell the stocks in a span of 1 or 2 months. Okay. And if there is an increment in the value, you show in the P&L account. Where you show?
P&L account.
Why?
P&L
Because your
account.
intention is to sell. That kind of security is called as trading securities. What is that?
Trading
securities.
securities.
But this security which you want to hold for 5 years and then you want to sell is nothing but called
Other.
available for sale. What is that? You will be coming across this topic in the accounting for investments chapter. It's a new thing for you, but I want to give you a rough idea. Available to sale securities. What is it called?
Available to sale.
There are 3 types of the securities or investments in securities or bonds or stocks and bonds is classified into 3 types. One is held to maturity. Second is available for sale. Third is trading securities. Held to maturity doesn't work for stocks. It only works for bonds because bonds can only be held till maturity. Got my point?
Yes, sir.
Right.
There is no maturity date for stocks. But stocks can come under the second and third category. In fact, bonds also, because there are many companies which trade in bonds. They sell bonds to people. Okay. There are many companies do that. Available for sale. What do you mean by available for sale? The intention is to hold for some period of time and then to sell, correct?
Yes.
Hello?
Yes.
Yes. So since you are holding this and not selling this, holding gains have to be accounted, because in balance sheet you are writing 18,000, but you should write the increment of 8,000 also. So for that there is a separate account called OCI, other comprehensive income section, in which you will be only recording the non realizable nature incomes. That means you are earning, but you are not receiving. Understood? And then second question, sir, we follow accrual concept now. We write such kind of things in SOPL also. See, specifically the incomes which cannot be shown in SOPL can only be shown in OCI. And here what I am speaking is, these are the incomes which you are not going to realize very sooner even. It's going to be very late for you to realize such kind of incomes. Am I right? When you change the nature of the security, what do you do? When you change the nature of the security, what is the change in the nature of security? You now don't want to hold it, you want to sell it.
Yeah.
You have held it for some period of time, some satisfactory period of time of 5 years. Now immediately you want to sell. So the nature has changed, na? Yeah. Please tell me.
Yes.
From available to sale, it has become trading securities, correct?
Trading security.
So it was held for longer period of time, and you are not going to realize any income from that. That means you are not going to get cash from that. Only it is holding gains. What is that?
Holding.
Yeah. So those kind of incomes whereby the money is not going to be received immediately. It will take long time, and the nature of the security is not changing immediately, will change in the future. Till that time you will record that in the OCI section. That is what is other comprehensive income section all about. And need not worry, tomorrow when I'll be starting the class, I'll be starting with income statement already done. I'll be starting with OCI only. Okay, here. Other comprehensive income. After finishing this part only, we'll be moving forward for our questions. Okay. So tomorrow you have to learn only one account, and some 20-25 questions we'll be doing collectively.
Okay.
Yeah. But till that time, I want you to read this particular chapter very thoroughly from beginning.
But we don't have a New Hawk textbook, sir.
This is the New Hawk only 2020 version. You said na 2022.
2022. 2022 I have, but I don't see all this thing. In which page number we have this?
We have this page number 10.
Page number 10 here goes to liquidity ratio, sir.
No.
We do not have it.
You are using part 2, I think. This is part 1
book. Acha, this is part 1 book.
Yeah, you are sitting with part 2 book maybe. And searching part 1.
Okay. Same topic. In part 1, page number 10. Okay.
Got it?
So, we will go through the page number 10 completely before the class.
Yes. No, I'm winding up this one. This is almost like today, almost done this part. Yeah.
So for revision, we can go through, right?
Okay. Yes, you can go. Yes. Now, like non-controlling interest. Yeah. Now we should discuss NCI. What is NCI? This is A company. This is B company. A company has taken 80% stakes in B company. So A is called the controlling interest. And who is the non-controlling interest? Public. Public in the sense, the ones who have 20% shareholding in the B company, correct? The investors. Can they control B company? No, they don't have the majority shares. Those are called NCI. They are also a part of equity because their investment is also been made in the company. And then treasury stock. So suppose I have some 1 lakh worth of stocks which is outstanding in the market, and 10,000 worth of stocks I'm buying from the market. So what will I do? I'll subtract as treasury stock or stock repurchase, correct?
Repurchase.
So now my outstanding shares of $90,000 worth. So this becomes the treasury stock. So this is what is all about the balance sheet. I want you to go see this benefits and all. These are simple things you can really read and understand. And some points here, if I have to discuss, balance sheet provides info about asset, liability, equity. That's it, and also about the rates of return. From the ratio analysis, you can get that about the capital structure, what the business has, how much debt the business has, and how much equity the business has, and about the cash flows. With the help of cash flow statement, they come to know about the total cash flows at the end of the year what company has. Balance sheet also helps us to understand about liquidity, financial stability, solvency position of the company. We have already discussed this one, but there are certain
Yeah.
limitations of balance sheet. Many assets are not reported in the balance sheet. I already told you that you have three people in your company, that is Alex, Tony, and Robin. So do you think can you show them in your balance sheet as Alex $1 million, Tony $2 million, and Robin $5 million? Can you show them in the balance sheet, please? Tell me.
No, sir, no.
Why? Because you cannot buy them. You can buy their services, but not the person. Correct or wrong?
Yes, yes.
Yes.
Right.
So because human resources are invaluable, you cannot. No one can quote a value for human resources. So that's what. Uh, Even though they're being very important assets for our business, they cannot be recorded. Value of certain assets are measured at historical cost. Do you think something which you are writing? See, I bought a flat in Barkatpura area 20 years back for 3 lakhs, let's say, or Kachiguda for 3 lakhs. I'm still showing 3 lakhs and I'm depreciating this like every year. Let's say like $3,000 is the depreciation. How much?
3,000.
1%, not even 10%. Do you think it is
Hmm.
justified to show 3 lakhs every year? Today, if I want to sell this in the market, people are ready to give me 60 lakhs, seeing the area and demand. Do you think it is realistic
Hmm.
to show, to still show this value in the balance sheet? Is it giving you a clear picture about your asset value?
No.
Is it giving you? No, it is just in the books you're adjusting. In the market, you're getting way more. So it's not justified. Isn't it so?
Yes.
Right.
Yeah. So, value of certain assets are measured at historical cost. Judgments and estimates are used to determine the value of many items reported in the balance sheet. For example, see, many of the things are based upon your estimates, the receivables what you show, and you deduct the
Hmm.
bad debts from the receivables. Those bad debts what you're deducting is your estimate. Am I right? Can it be a right figure?
Yes.
It cannot be a right figure. And
No.
warranty claims also, you're expecting 10% warranty claims every year, but 25% it was this year. So your claim is not realistic claim, correct?
Hmm.
See, more liable. This last point is something which can be a troublesome point for you because you may not be knowing many of the concepts, but I'll explain still. Most liabilities are valued at present value of cash flows, discounted at rate that was current when the liability was incurred. Do you know what I'm speaking here? Do you know about cash flow, discounted cash flow techniques? Do you have an idea? Do you know what is present value, future value of something? How to find out? Please tell me.
No, sir, I don't.
No, so leave this point there. Before, like, what can I do? What can I do is I can give you a video today, one or two videos. You go through that before coming to tomorrow's session. You will be getting a good idea about this, what it is. Okay. So then tomorrow it will be easy for me to discuss this and give you a very good uh, example and make you to understand this one. Understood?
Okay.
I'll
Okay.
just give you the concepts to go through. What is the present value? What is the future value? That's it. I'm not going to give you any some basic concepts only about this. Fine.
ठीक है. All right.
Yeah. So we're done with balance sheet completely. Income statement format is done. Only thing is we need to discuss about the elements and the OCI section tomorrow, the other comprehensive income, and then some couple of questions. So this first unit is done. Okay. Then
ठीक है.
Is
business
any
statement.
format for comprehension?
Yeah, we'll give now, madam, tomorrow. I'll
Yeah,
give
yeah.
the format completely. I'll discuss everything tomorrow regarding that topic. Complete discussion.
Sir, I have a doubt on the
Yeah.
IFRS and US GAAP,
Please tell me.
sir. You said that IFRS is a principle based and US gap is a rule based.
Yes.
Okay, so the companies who are doing business, who are dealing business with outside in US, do they need to follow the US gap or IFRS?
See, of course, if you are dealing with US see what happens is where your company is incorporated, that matters. If your company is incorporated in India, you will follow Indian standards only because you'll be preparing the statement at the end of the year in India, correct?
Okay.
Of course, if your account where your accounting happens, see, you may have a branch in US, you will account in US,
Okay.
so there you'll be following the US standards only.
Okay.
See, US standards are also global standards.
But sir, if
I
you take
understand. I
if you take
understand. This problem is there around the
okay,
world. That's
okay,
the reason why IFRS has to be followed, or international standards should be followed. That's the reason why IFRS has come into picture. We have US GAAP, we have Indian standards. Both are prepared based upon uh, their own premises. That means their own thought process they have put into preparing their own standards. Correct? And
yes,
that too, they made these standards for the convenience of their own people. Now what happens if Indian is dealing with US clients, or US guys are dealing with Indian clients, they should know each other's standards. Am I right?
okay,
Right.
Isn't it so? So what happens here? But your company is incorporated in India. You have a branch in US, but the incorporation is done in India. Isn't it so?
yes,
So
So
if it is reverse, sir,
yeah, of course. Then you may have a branch in India and incorporation in US. So what
hmm,
happens? You will make a consolidated statement at the end of the year. Correct?
hmm,
You will make a group account, na? Group accounting. You have an idea about consolidation or group accounting?
no, sir, I don't have.
So that's the reason you may be facing some problems here. So when you make a group account, that means at the end of the year you will be accounting, like you'll be taking all your branches or your subsidiary companies, and you'll be making a single account. So showing all of them as one single company. That time you have to translate
hmm,
these all treatments, whatever you have done as per Indian accounting standards with respect to US accounting standards, correct?
Okay.
That's called translation. What is that called?
Translation.
So these things are very troublesome things, and since it is a very tedious and lengthy process, what companies are doing is they're following IFRS. What does this IFRS do? Indians are following IFRS, US people are following IFRS. So this has become a common standard for both of them. See, this is me in India. I have a business in China. I don't know Chinese, they don't know Hindi. Okay? That means I don't know Mandarin language, they don't know Hindi language. But both of us know what?
English.
So
English.
can we communicate?
Yes.
That's
Yeah.
what. That's the reason why IFRS and these global standards, they are pushing every country to follow their standards for international businesses. So that all these issues of translation and all is not required. Okay, you need not translate their treatment as per your treatment. See, translation is what? Someone says something in Mandarin, and I have to like I have to some I have to like convey the meaning of that to some Indian guy. So I have to translate that. I have to translate that, isn't it so?
Yes.
Right.
So when the treatments are given as per the US
US
gap,
gap.
or in Indian standards, and my company is in US, incorporated in US, I have to translate from here to there. No? I have to show the treatments, correct? That this is what they have given, and it works like in our country, it works like this. Did you understand what I'm saying?
Yes, sir. Yeah.
So see, Indian standards are followed in India, but not in US. They won't accept Indian standards. So we will translate, give the similar kind of treatment in US gap in US, and we'll try to make a group account. But now since IFRS has come, and US gap also, since US companies are there around the world, they're asking they're asking to follow this US gap only, many places, because we are superior and better standards than you. And it is happening also. Many countries have become flexible. You know, many African countries do not have standards at all. So what are they doing? They have adopted a US gap or IFRS.
Yes.
Understood? That's what.
Sir, but in if the if we have a company here and if we have a company in US,
Hmm.
so if the company is incorporated here
Hmm.
in India,
Hmm.
so does that Indian company will maintain two accounting standards? They will create a balance sheet
No,
and
see,
profit and loss in FRS and
yeah,
US GAAP?
US company is operating in US. Indian branch of US company is operating in US. They will follow US GAAP there to prepare single accounts. But at the end of the day, our company, which is in India, have to show group account. That means they have to show all companies as one company, correct?
Yes, yes.
Then they'll follow Indian accounting standards. They'll translate the US standards to Indian standards and they'll show. But now these days, what is happening? IFRS has come into picture. So we are following the global standards. If US is following IFRS, we are following IFRS. Things become easy. If they don't
Yes.
follow, then we have to translate and we have to consolidate.
Okay. Yeah, got it. Yeah.
Understood?
Yes.
So done. Then you have to go through this till here, and tomorrow we will start with the next chapter, that is other comprehensive income. Okay?
Yes, sir. Thank you.
All right, sir.
Yeah. Thank you. Thank you.
Okay. Thank you.
Thank you.